see it happen over and over again. Did you just kick? Yeah, 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 because I don't want any distractions, right? Like people paid good money and, you know, I want to make sure everything is done correctly. So I don't need any distractions. So like, you know, that's the thing. Most of the concepts you will see here, you will understand them way better once you see them happen live in the market over and over again. Trust me, when I first saw breakouts or when I first saw breakouts, I watched them happen maybe like 2-3 weeks in a row, and then I realized, oh, you know what, this is worth writing about, or this is worth teaching about, because it does work, right? So that's all gonna, like, it's just the first day. It's just the first day of the webinar, and maybe joining a group too, so it will take some time. What strategy do you use? I just wait for fake outs, or I'd wait for a breakout. So it's like a correction in one candle on higher time frames of more candles on lower time frame. Yes, exactly. It's a correction on the higher time frame, but if you look on the smaller one, on the lower time frame, you will see candles going up and then coming back down. So it's basically a retest on the smaller time frames, but it's a correction on the higher time frame. That's, I think, the best way to put it. Okay, okay, this was the same example here. Time for a break? No, we already took a break. Is there any indicator for more confirmation you use? No. There's no indicator for more confirmation. Sometimes, you know, I would use EMAs, but sometimes I use EMAs, but not a lot, right? Like I only use EMAs if, like, you know, it's going with the trend. So we're going to talk about some EMAs here as well now. Yeah, breakouts and fake outs, because, like, you know, technically they make sense. And I don't think there's any other way, because breakouts are basically you're trading the trend. Breakouts you can also catch on swing trades when you're trading like based off the daily time frame, the 4-hour time frame, the weekly time frame. Fibonacci's, I don't use Fibonacci's. I used to use them, but then at the end of the day, what was happening was that they were really contradicting my original analysis. So I stopped using Fibonacci's. I have a love and hate relationship with Fibonacci's. Yeah, you know, so the less indicators you use, the better your confirmations are going to be, because then there's going to be very less things that will contradict your analysis. Yeah, okay. EMAs, this is very optional. If someone wants to learn about it, perfect. If you don't want to learn about it, that's totally fine too, but these are very optional. I wouldn't really stress a lot on EMAs. EMAs are just there to provide you confluence with where the market can go, right? So basically, the EMAs used is 14, 50, and 200 EMAs. You don't have to use them always. Just make sure that price action makes sense first, because price action comes first. Indicators come in the end, right? We're going to talk about that later. During breakout continuation retest, you will notice 14 EMA playing key roles as a wow factor, you know. The 200, now, when people, they start to use EMAs, if you do start to use them, you have to realize that, okay, the 14 EMA is going to act as a mini support or mini resistance. 50 EMA is going to act as a stronger support or resistance. 200 is going to act like the strongest support or resistance, right? I wouldn't really recommend new guys to really focus on these, because they do take a lot of practice, right? And sometimes when price is ranging and you see 14 EMA, like, you know, guiding price, that can really throw you off, because when price hasn't broken out, there is no trade. But sometimes the EMAs are going to come up in a way that it will make you think that it's a trade. So that's why I wouldn't really recommend for new guys to use EMAs right now. So let's go forward. Okay, so 14 EMA acts as a dynamic support resistance. This is just for your information. if it's going bullish, the candles have to be closing above it, right? So if candles are going bullish, if the momentum is bullish, and if they're closing above the 14 EMA, I hope you guys are making notes. If the candles are closing above the 14 EMA, let's say on the 30-minute or the 1 hour, then there's a very, very high chance that it can continue to go up, provided that there is enough range to fill. Makes sense? Let's say price made a high, price came down, made a support, just like we talked about earlier, and starts to go up. Now, what you're going to notice is that 14 EMA is going to start to trail up. Now, as long as there is range to fill, it will continue moving up. I see. Now, you will know this move based on price action itself, right? But then you're going to have the 14 EMA here, just like kind of like guiding you. Hey, man, yeah, we're going up, keep going up. You know, same thing happens when price starts to go bearish, right? So we're going to look at a lot of examples here too, based on that, just so that, you know, we can make it more relevant. Oh, just want to get it down. Okay. All right. EMAs with market structure. All right. What's happening here? This is the 15-minute chart. Okay. This is the 15-minute chart, right? Price was making support here. Now we're just trying to tell a story, right? Price was making a support. Candle broke down. Next candle went up, right? Next candle went up. And then price started to make some sort of resistance. And then price came down, and then it came back at the support and finished the bullish candle. Based on what we've seen is that this should be a good indication that will continue to go up. Yeah, exactly. But then again, you have to look at the time. This is PM here, so we won't be really so sure. Makes sense? Just look at this time. This was a trick example. Another one. See, now we're going to bring on the EMAs. Boom. We got EMAs in. This back. Boom. EMAs. So you always got to be cautious about the time. No one really said, oh, it's not the time for me to trade. You should look at the time. All right. EMAs with market structure. The next candle. All right. So 15-minute time frame. Let's see here. So first of all, what we're going to do is we're going to see if, okay, so we have resistance somewhere here, okay? And we have support somewhere down here, right? So now two things can happen. Either price can continue to go up and it can continue moving up towards this resistance, or somehow the next candle can go bearish and then we can just sell towards support, right? See what happens. Oh, this is perfect. So what does this mean? What can someone tell me? What does this mean? You only have to say up or down. That's it. You need to get into practice of saying up or down. There's no buts. There's no ifs. It's only up or down. If it's up, you have to know where your stop loss is going to be, where you're going to put your stop loss. Right? Because check this out. So if you are trying to, like, read the candles, look at this. 15-minute form support. This broke down. This came back up. And then this candle, it looks like it closed back in the range here. Make sense? Yeah, so the stop will be below this candle here. Let's see. Oh, look, yeah, we came up. And then it started to range because look at the time, you know, it started to range now. Yeah, but in volatile times, it will continue to go further up, right? So now let me bring on the 14 EMA here, and you see what I was meaning here. It's 14 EMA. See this candle closed above the 14 EMA. This candle closed above the 14 EMA. 14 EMA acted as dynamic support, right? So you guys are right. Stop below the 15-minute candle and then continue to move up. Oh, I would love to stay. Oh, take care, Kyo. Kyo. Is that how you say it? Kyo? Yeah, so it's gonna be it's gonna be recorded. Well, actually, it is recording. It's gonna be up in the drive. I'm not sure how big it's gonna be. But yep. So let's go to the next example here. All right. Very good example here. Okay, let's see what's happening here. So price has, let's see, this is the 1 hour chart. This is the 1 hour chart. So we formed resistance. And then we're trying to form some sort of a resistance here again. Right? Oh, okay. Now we're waiting. Okay, see, now this makes much more sense. Now we formed more resistances here. And now if you look at the time, this time is coming on to 6 a.m. Look at this time. 6 a.m. we are coming on to. 6 a.m. means this is pre-New York, right? It's pre-New York. Oh, and we got the bullish candle here on the 1 hour. 6 a.m. What's happening here? Retest so far. That bull candle is a retest. Okay. So are we heading down based on this candle, or are we heading up? Up. Okay, perfect. So is this candle enough to tell us, okay, if we're heading up, where can we have our stop loss if we're heading up? Below the candle. Perfect. 1 hour candle. Below the wick. Perfect. Let's go forward. Yeah, perfect. That's the trade. This trade is done. This is New York session trade. Right? And let's go forward. See this? See this fuck you candle? This is a fuck you wick right here. If you take profits, you let one run with stop loss at break even, you got stopped out. But you already took profits. Yeah, you got 5 pips on you. That's true. Oh, actually, it was let's see, how many pips was this? Let's see, we entered at 112.50. Yeah, almost 10 pips, barely 10 pips. Okay, so let's bring on the EMAs here. The EMAs, look at this magic, man. It looks so cool. Look at this. Man, so cool. See? So now notice how this 1 hour candle closed above the 14 EMA, right? This red one is the 14 EMA. Look at it. It closed above the 14 EMA. Yeah, and the crossover too, it pushed up. So now look at this 1 hour candle. It came down to the 14 EMA, tapped it, and went right back up. And then this one here as well, it tapped the 14 EMA and went right back up. Yeah, confidences. Okay, we have a couple more examples here. I hope so far this has been making a lot of sense for a lot of people here. go to the next one. All right. What's happening over here? What's happening here? This is the 1 hour chart. This is the 1 hour chart. Price fell all the way down. What did price do here? If not using EMA, the bullish candle closing above support would have been the confirmation for buyers, right? Yes. Yep. Exactly. That would have been the confidence to take buys. Okay, so this is the support right here on the left that price broke. Price came down. I think it's starting to make support here on the 1 hour. Now, yeah, exactly. Oh, you're right. It needs a retest. It needs a retest to take sells. But I know a lot of cowboys, they would like to take buys here because the 1 hour closed bullish and they take a buy with the stop loss below a 30-minute candle. I call bottoms, I'm a cowboy. Yeah, but you waited for a confirmation. Okay, perfect. Look at this. We're trying to move up. We're trying to do a retest here to go further down. But where are we entering? Where are you entering? You're waiting for the confirmations. I'd wait for a bearish candle. Yeah, it makes sense. Oh, look. Is this your entry? This bearish candle? Where will your stop loss be? Where would the stop loss be? Yes, above the 60. You know, and now, if you're looking left, you see that this was a clean move up, right? So it only makes sense that there would be a clean move down too, because, you know, there's less traffic here. Yep, continue to move down, maybe do a little retest, and then continue moving down. That was perfect. But guess how the EMAs look here. You were just surprised how EMAs look here. Does this make sense with EMAs now? Because you're looking at price action first. We're looking at price action before we're looking at the EMAs. Because the price action says, okay, we're heading down, and then you look at the EMAs. Because indicators come in the very end. Yep. See, price action made sense first. All right. We got this fun time happening over here. Price is ranging. Price is ranging. And yeah, it's a shitty chart, basically. It's a very shitty chart. Oh, bullish candle. Broke up. Yep, resistance broken. And continue moving up. There's a resistance broken on a dotted line. Right here? Yeah, but this is very aggressive. Yeah, this is very aggressive. So maybe this is coming down for a retest. Yep. This could be, yeah, back to breakout, retest and up. So yeah, this would make up for a nice retest candle. Oh shit. Yeah. So if you look at the time, This is 3 a.m. This is London session. London session has these wild moves. You know, 3 a.m., 2 a.m., 3:30. Yeah, that wick would have been a very aggressive buy. And then look, you know, it starts to like do another retest and it continues to go up. Yeah, that's London session, wherever we now. Right at the bottom there, when you look left. Let's look left. Where? Are you talking about right here? Right here? No? Oh, right over here. No, I wouldn't say that because it's a 15-minute time frame, right? It's a 15-minute time frame because there's not much confirmation here on the 15-minute time frame. Let's see what we can get on the 30-minute we have on. Oh yeah, look at this. Look at the EMA confluence here. At this bearish candle came down, tapped the 14 EMA, but closed above it, right? So remember when we were talking about that 14 EMA being like a strong support, 50 being like a stronger support, and 200 being an even stronger support. So this candle closed above all the EMAs, right? It broke out, made a high, closed above all the EMAs, closed above this resistance. So there's a very, very high chance it's going to continue moving up. But this was a very aggressive trade. I think the higher time frame is going to give us more simpler information here. Oh yeah, there we go. Yep, so this candle was the confirmation. Yeah, this fake out. This 30-minute candle was the confirmation. You know, stop below support, formed support. And then, you know, as you look that we're coming towards the volatile time of the market. Right here, like this one. No, no. For a fake out, the price needs to range, you know. Price needs to have like a bigger range. Like this, it needs to have a range so that, you know, it can fake out, try to go down, but it comes back up and then goes up. So it needs to have a bigger range than this, because this is just, I think, way too small. Yeah, no problem, Scott. Have a good day. If you get 15-minute close bullish, do we have to wait for the 30-minute close too? I would definitely wait for the 30-minute close candle, because from what I've seen, 30-minute closes, they give the best confirmations. 30-minute closes, because sometimes, let's say if there's still 15 minutes left for the 30-minute candle to close, that thing can just reverse all the way down, right? That thing can just close in a way where you're like, oh man, now what? So that's why it's really important to wait for the 30-minute candle to close. Gives you really good confirmations, gives you really good confluences, right? So now if you were just following price action on the 30-minute, you could have entered right here saying, oh, look, we formed support and, you know, we're going up now. And then while you're so now, but in the other spectrum, if you're waiting for the EMAs, you're catching a late entry, right? Because indicators are always lagging, right? They will tell you things that are supposed to happen after they've already happened, right? That's why they say always follow price action, because price action will kind of like, you know, hint towards things that are about to happen, like that in the now. But EMAs, they're always lagging. All right, what's happening here? We got the 15-minute chart. Let's see. Already appreciate a lot, fam. Thanks, me, Rob. I'll talk to you later. Best is to skip EMA and go naked. Just confusing now. Yeah, exactly, right? So we're gonna keep it very, very naked here. We're gonna keep it very simple. Let's go and see if we have any confirmations. Okay, so we have a move up here. We have a move up. Let's draw resistance. Price broke this resistance. Wait for a retest. Oh, price went up further. No retest, no trade, right? No retest, no trade. Oh, price trying to come down. Candle closed with no wick. So, you know, when candle closes with no wick, I don't fuck around with those candles. There's a high chance that the next candle can go up. And there's a less chance that that next candle can come down. Oh, see, the candle came down. So now this would be a very aggressive entry. This would be a very aggressive entry for buys. Because, oh, this is euro USD as well, so this could be a very aggressive entry for a buy. I do think this would be a retest to go further up. I wouldn't buy it. Yeah, that's fine. See, sometimes the retests are not as clear as you want them to be, but that's totally fine. That happens. Where would you have entered? Me personally, I wouldn't have entered. I would have maybe taken a risky entry because basically I want to see a bullish candle close somewhere over here so that the next one can continue moving up, and that next one would be my confirmation to go up. But as this candle moved up, it's just, you just missed it. You know, sometimes it happens. You miss entries, but the times when you miss entries or when you miss trades, that's the time when you just want to, like, you know, sit back, relax, and just like say that, okay, you know what, maybe this wasn't the trade for me. And now we got the EMAs. I generally never look at EMAs, really. Only sometimes, very, very sometimes. All right. This is interesting chart. This is interesting chart. Let's see here. Gotcha. Exactly. Perfect. Consolidating. Oh, you guys are catching up nice. You got consolidation here. See, arranging. No reason to make sense out of it if it makes no sense. See, still gotcha. Oh, there you go. We got the breakdown, right? We got the breakdown. So now we gotta wait for a retest. See this? So see these candles here? This candle broke below than all these recent candles. We got the retest. So even though this is a bullish candle, okay, this is very important. Even though this is a bullish candle, you got to see where it's closing, right? It closed below this resistance. Yep. It closed below this resistance. So this should be, well, this could be like a retest candle too. Moving down and moving down, oh, and then moving up, right? So if in case, let's say people miss this move down, right? Yeah, if you've missed it, yes, exactly, William Chandra, you would have caught in the fake out. Because if you've missed it, you waited, and then the candle closed back in the range, then you know, okay, this move down was a fake out. And then the 70% of the time, what happens? The price will continue going the opposite way. And it went the opposite way. Yeah, I like fake outs better than breakouts too. So now let's bring on our friends EMAs here, and you know, if people trade on EMAs, look how, yeah, see, they didn't help you here at all. There's no help with the EMAs here at all. Yeah, exactly. You missed the move, wait for the retest, and then you know you're like, oh shit, you know. call it a day. Yep. All right. So what do we got next here? We have, we have break time. But since we don't have much left, so we're just gonna go through everything what's left here now. Those were the examples. Those are the examples. I made sure that the examples were pretty extensive. What's left? Basically, there's trading plan left. There's a little bit of a mindset things left. There is something called like how to track your growth. That's left a little bit. So maybe like half an hour or something. Maybe like half an hour or something. Okay. Mindset and statistical probability. So now we went through some strategies, right? We went through breakouts, we went through fake outs, we went through like, let's say you have a breakout candle and then you got to wait for a retest for the move to continue, right? All these strategies work, right? Let's say if someone trades harmonics, they work too. But every strategy has a statistical probability of working. Like, let's say if you only trade breakouts, you will know that 60 or 70% of the breakouts, they will always work, right? But the thing is, what would you do if your breakout trade fails, right? If, let's say, you trade 10 breakouts, and after, let's say, 2 or 3 successful breakout trades, you have a losing trade. What would you do now? If you have a losing trade, would you just accept that as a statistical loss, or would you take that loss personally, right? Taking that as a statistical loss, it means that you accept the loss. Yeah, exactly. You accept it. You accepted that this loss was supposed to come. It's a part of your plan. Because if losses are not a part of your plan, man, after that loss, you're gonna start revenge trading, and then you're gonna fuck up your whole like your strategy.